welcome back to the Dividend Diplomats YouTube channel, everyone. You've got your boys here, Lanny and Bert, the Dividend Diplomats. This is going to be a fun Saturday edition because we are going to talk about one of the GOATs of the real estate investment trust sector. That's right, everybody. We're going to be talking about not just any REIT, the monthly dividend paying REIT. That's right. This is a realty income focused video. Let's go. Let's get hyped, everybody. It's time to analyze.
Guys, before we do, smash that subscribe button. Give us a nice thumbs up on the video. Hit that notification bell so you don't miss a beat from your favorite boys over here from the land, Cleveland, baby. Yeah, we're talking about REITs. There's been a lot of noise about Realty Income hovering at or below $60 a share.
Yep.
Currently, at the time of this video, $60.22. And it's been funny, seeing all the diversification tweets, charts, articles talking about Realty Income, the powerhouse REIT. Yeah, they have Walgreens as a tenant. Good thing they don't have Bed Bath & Beyond as a tenant. But very interesting, very good diversification, mesh up that they have in their client list for real estate.
Yeah. So let's jump right into that. Actually, I think that's a good launching point here because that is the big thing with the stock falling, with a potential recession looming, with multiple economic indicators flying off in multiple directions. The question is, with a single tenant real estate company like Realty Income, is how are their tenants doing? Do they have exposure in their tenants? That's the key. And that's what Lanny was alluding to with the Walgreens tweets and the Walgreens hate that they are getting. So let's look here. Let's put this up here because we're going to talk about their top 20 clients. We're going to show the chart here. We're going to discuss them because it is so important for Realty Income's client portfolio to perform well so they can keep collecting those rent checks, getting that cash flow in there to keep paying and growing that monthly dividend.
It's all about cash flow in the REIT game, all about adjusted funds from operations from the REIT game, guys. So we'll be using that, by the way, to replace earnings per share. They do own Kroger, or they do own real estate that Kroger uses, which makes me pretty happy. You gotta love that. You gotta dig it. I see some Lowe's on there, CVS, FedEx. You gotta like their tenants right now.
Yeah, looking at their top five, just to rip them off, Dollar General is 4% of their Walgreens 3.6% of their portfolio, 7-Eleven 3.4%, Dollar Tree 3.4%, and Wynn Resorts, the surprising one, coming at 2.8%. So what does that tell me right out of the gate for the top 20? There's not one company that they are overexposed to that can cause a significant hampering of their cash flows. So even though Walgreens is having a tough time, Walgreens is going to be closing some stores. That's what the company announced in their earnings release when Walgreens got slammed. The potential exposure to Realty Income is contained because it is only 3.8%, and they are not closing all their stores. They're just closing a portion. So you might see a small chink there in the revenue armor if they close some Realty Income property.
Yeah. And that's, has had Realty Income stock price a little shaky this year, down a little over 5.5%, down about 12% since last year. And I know many dividend investors out there, Bert and I both included, and guys, let us know in the comments, how many shares do you own of Big O, but a very big dividend growth stock that a lot of investors start out in their dividend growth portfolios simply because they like that monthly dividend check as if you were a landlord coming in each and every single month. Plus, I think Realty Income does what, Bert? About 4 dividend increases throughout the year as well.
Yeah. Quarterly dividend increases. So they've increased that dividend. They're a Dividend Aristocrat, and a Dividend Aristocrat is a company that increases dividend for 25 plus consecutive years. Realty Income joined that club last year. They've increased for 26 consecutive years, and they've increased every single quarter since they initiated that dividend 26 years ago. So that's the cool part about Realty Income. They're very committed to growing that dividend income. Caveat is those dividend increases aren't always the largest. Some of them are laughably small. Like this last dividend increase was 0.2%, but annualized, the dividend increases do add up to a pretty substantial amount.
Yeah, I couldn't agree more. I mean, Bert, do you want to dive in now? Let's look at the statistics here on Realty Income to see if this is a dividend stock to buy right now as we head into this month of July. Also, guys, hope you guys enjoy that 4th of July coming up here in a few days. It might be a big birthday too here in the Dividend Diplomats clan over there.
Yeah, no, I guess so. I was trying to see whose it was going to be, but we'll find out. So let's look at this here. Let's look at the price. Their price is 60.22. And remember, that's been the price that Lanny and I have been watching. We've been tweeting about that $60 per share threshold. That's really what continues to catch our attention here for Realty Income when it hovers around there. So at the time of this video, it's 60.22. Their FFO per Seeking Alpha is 413. That's a price per FFO of 1458, well below the PE ratio of the S&P 500.
And let me just check really quick too, guys. The S&P 500 PE ratio, again, the market's hovering around that 4,400 mark that Bert tweeted about here just a moment ago. 25.45 times earnings right now at the time of this video. So yeah, Realty Income definitely showing some undervaluation there. And when we look at the actual dividend payout ratio that Realty Income has, again, you're going to expect and anticipate that they have a higher payout ratio simply because they're a REIT. They're required to give out most of their earnings back to those shareholders. People love, love, love that in the REIT standpoint. Rounded up, they do about $3.07, per share per year. Again, if you want to just take that, divide that by 12 months, about 25 and a half plus cents coming your way per share every month. The payout ratio is about 74%. So underneath 90%, underneath the 80%. So plenty of room for them to keep paying and keep growing.
And that's what's important too, because if one of their tenants shows issues like Walgreens, and there's a percentage of revenue they might lose from Walgreens, assuming they don't replace it, they still have 26% buffer there on their payout ratio since it's at 74. So there's still plenty of room to withstand a small blow to some of their tenants. And I think that's such a critical point right now, especially as we head into what could be a tough second half of 2023.
Could be a tough, could not be. The American still seems so resilient in this economy. It is absurd.
Yes.
But guys, 26 years of growing dividends. Yeah, Bert, at 4% average per year. On top of how large of a dividend yield do they have now?
Yeah, their yield is 5.10%. So it's getting comfortably over 5%. So that's the beauty of it. $60 per share is right around 5% right now.
Wow, amazing, guys. 5-year yield, yeah, 4.47%. So yeah, yielding, about 63 basis points above that 5-year yield average. There's no question why people are scooping up shares of Realty Income. Now, just to summarize here, Bert, we've got what, a PF price to FFO of 1458. What's the payout ratio again?
74%.
Nice. 26 years of juicing that dividend, taking the needle right to the dividend.
Yeah, that's what they call the Mark McGuire and Sammy Sosa special right there. Juicing that thing up. Their 5-year dividend growth rate is 3.75%, and that yield is now well over 5%, 5.1%.
Bert, what's your gut reaction here to Big O?
Yeah, I mean, look, this isn't a bad time to start nibbling and keep growing my position in Realty Income. If I have some money sitting around, it might not be bad to add some shares from there. And I'll even take that one step further. If you're looking to finally initiate a position in a REIT and you want to have one that you know is reliable, that has a strong history of increasing its dividend, you don't want to search for the diamond in the rough. You just want something that's going to perform well and be a foundation REIT in that sector. This may be a great time to start building that position in the monthly dividend paying company.
Guys, there's Bert right there, dropping the mic, saying it's a pretty good time to buy shares of REIT or of this REIT. What are you guys doing? You guys buying Realty Income? Do you guys like it at 60, above 60? Obviously, I think we all can agree we'd like it below 60. But let us know if you've been gobbling up shares, adding to that forward passive income, and being a landlord without being a landlord.
If you haven't already, subscribe to the channel, give this video a thumbs up, and just remember, if you're not with us, you're against us, everybody.
That was Bert and Lanny from the Dividend Diplomats, over and out.